Over the past few years, many countries, including China, Russia, and Brazil, have been actively pursuing de-dollarization. As a recent example, in January of this year, there were reports of Iran and Russia collaborating to introduce a new cryptocurrency, backed by gold, for use in foreign trade transactions. This move towards de-dollarization is a significant development, as it signals a growing trend of countries seeking to reduce their reliance on the US dollar and assert their independence in the global financial system. As the trend towards de-dollarization gains momentum, it is becoming increasingly evident that many countries are joining. However, you may wonder what de-dollarization is and why countries choose this path. Allow us to provide you with a clear understanding. Hello, and welcome to Primetime TV. In today's video, we'll explore why countries are moving towards de-dollarization. But before we begin, make sure to subscribe to the channel. What is de-dollarization? De-dollarization refers to reducing or eliminating the use of the US dollar in international transactions, trade, and reserves. This means countries are shifting away from using the US dollar as the world's primary reserve currency and the main currency for international trade. De-dollarization is often pursued as a way for countries to reduce their dependence on the US-dominated financial system, promote economic and financial independence, and pursue their economic and foreign policy objectives without interference from the US. Why US dollar is the strongest currency? Dollar has since long been the prominent reserve currency, and that's not all. The size and strength of the US economy, the deep and liquid financial markets, and the perception of the US as a bastion of stability have underpinned the US dollar's prominence. The US dollar is the world's primary reserve currency, meaning that central banks worldwide hold large amounts of US dollars in their reserves. This gives the US dollar high liquidity and demand, making it a preferred currency for international trade and transactions. It has a stable political and economic environment compared to many other countries, and the world's largest economy backs the US dollar. This makes the US dollar a relatively safe and stable currency for investors and traders. The US is one of the world's largest trading nations, with significant global trade conducted in US dollars. This creates a high demand for US dollars in the global market. The US has the world's largest military, which gives it a significant geopolitical advantage. This, in turn, bolsters the US dollar's strength as a currency of international trade and transactions. Why are countries dumping US dollars? Number 1. Geopolitical tensions. Some countries may be looking to diversify away from the US dollar due to geopolitical tensions. The US has been involved in several conflicts and disputes with other countries, which can affect its currency's value. For example, tensions between the US and China or Russia can lead those countries to reduce their holdings of US dollars. In addition, the US use of economic sanctions against other countries can also encourage those countries to reduce their dependence on the US dollar to avoid the impact of those sanctions. A strong dollar makes importing products from the US difficult for other countries. As a result, they have to buy their goods from elsewhere to avoid paying too high a price for them. This can cause problems if the country is running into financial trouble, as this will make it hard for them to pay off their debts or fund future projects. Number 2. Interest rates. The US Federal Reserve's interest rate can influence the dollar's value. When interest rates are high, investors are attracted to US dollars and may purchase them, increasing their value. Conversely, when interest rates are low, the dollar may weaken. The US has kept interest rates low in recent years to support economic growth, but this has also led to concerns about inflation and the potential devaluation of the dollar. Number 3. International sanctions. The US has imposed economic sanctions on several countries, including Iran, Venezuela, and Russia. These sanctions can limit the ability of those countries to access the global financial system and cause significant economic harm. In response, some countries are exploring reducing their dependence on the US dollar. US sanctions can also lead to losing confidence in the US dollar as a stable and reliable global currency. If other countries perceive the US as using its dominance over the global financial system to achieve political objectives, they may become less willing to hold US dollars and seek alternative currencies for international trade and investment. Number 4. Alternative currencies. Finally, some countries are exploring alternative currencies or digital currencies that could compete with the US dollar. For example, China has been developing its digital currency, the digital yuan, which could eventually be used for international transactions. Russia has also proposed a digital ruble that could potentially be used to reduce dependence on the US dollar. Other countries, particularly those in the Eurozone, have pursued de-dollarisation to promote the international use of their currency, the euro, to enhance their global economic standing and secure greater financial autonomy, per the government official's post. A stable and equitable financial system is paramount as the world becomes increasingly interconnected. And with that, the over-reliance on the US dollar as a reserve currency has to some extent led to vulnerabilities and imbalances in the global economy. These factors, combined with the growing economic power of emerging markets and their desire for a more diversified and resilient financial architecture, have spurred many countries' interest in de-dollarization. Why is it difficult to dump dollars? It is difficult to completely dump the US dollar because it is still the dominant currency in global trade and finance. The size and strength of the US economy, the deep and liquid financial markets, and the perception of the US as a bastion of stability underpin the US dollar's prominence. Additionally, many international transactions, such as oil trading, are denominated in US dollars. Furthermore, it can be challenging for some countries to find alternative currencies or assets that are as stable and widely accepted as the US dollar. Shifting away from the US dollar can also be slow and expensive, requiring changes to financial systems, infrastructure, and contracts. Therefore, while some countries may seek to reduce their reliance on the US dollar, completely abandoning it in the short term may not be feasible. The US dollar remains the dominant global currency. Several factors could contribute to a shift away from it in the future. It remains to be seen how these factors will play out in the long term, but it is clear that the world is exploring ways to reduce its dependence on the US dollar. The US may need to consider strategies to maintain the dollar's dominance and competitiveness in the global market. Nevertheless, the US dollar remains the preferred currency for international transactions and trade. It will continue to play a crucial role in the global economy for the foreseeable future. What do you think about the dollar as a reserve currency? Drop your thoughts in the comments below. If you like this video, give it a thumbs up and share it. We will see you in the next one.